Hey, everybody, thanks for joining. Before we get started, please take a minute to click subscribe to my channel to keep up with all of my latest investing and personal finance content. And check out the link you see on your screen right now for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. All right, so there are a few stocks in my portfolio that I own. I see a lot of growth potential for, but a lot of people don't. They either think they're mature businesses, they think their growth potential is limited. So the first one is Disney, household name. Its theme park business is just a cash machine. The Disney Plus streaming service kind of came out of nowhere and is now, atop the market along the same conversation as Netflix. It has valuable intellectual property. Its movie franchises are best in the business. Its cable networks. It has its cruise line. Disney is an entertainment giant. The stock is depressed right now because the company hasn't figured out how to monetize streaming. It's making money from Disney Plus for sure, but it's not profitable. It's generating revenue. So the company just made a big CEO change. If Bob Iger can figure out how to monetize streaming, Disney could be a home run long term just for that reason. But I think there's a lot of optionality in the rest of its business. I think its merchandise is still, yeah, there's a lot of interesting possibilities there. And the theme park business, I think Disney World, to be honest, really needs a big overhaul. And it looks like they're in the early stages of doing that. And I think there's a lot of monetization potential to be unlocked there. I think Disney will eventually be $1 trillion company. It's under a $200 billion company today. Number two is General Motors. Ticker symbol is GM. General Motors is thought of as a legacy automaker because it's one of the oldest. People see limited growth potential, especially relative to newer players like Tesla and Lucid and things like that. I couldn't disagree more. I think GM is the best kind of sneaky play on the electric vehicle and autonomous vehicle markets there is. So for one thing, that's a very cheap stock. GM trades for less than 6 times trailing 12-month earnings and remarkably low multiple. It has tons of potential in the EV space. It has the most popular models that have tremendous brand loyalty. Think of the electric Silverado pickup truck, the Hummer EV that already sold out. GM has tremendous brand loyalty, especially in the pickup truck and SUV space. People who drive Silverados wouldn't drive an F-150 if it was free. It's tremendous brand loyalty that will translate well as they roll out electric vehicles over the next 5 to 10 years. They're a big player in the defense market. The United States government buys a lot of vehicles from GM and could completely, spend billions of dollars electrifying its fleet. It has proprietary battery technology, which is a big differentiator. It has the Ultium platform, and it is also the majority owner of Cruise, which is arguably the most promising player in autonomous vehicles. They already have paid autonomous taxi rides going on in San Francisco, and if that eventually rolls out, across the nation, it could be a massive, massive win for this company. So GM is currently has about a $50 billion market cap, and I think it can be much, much larger in the years to come. And last, the smallest one on this is a small company, so market cap wise, it shouldn't be surprising. There's a lot of growth potential, but a lot of people see Boston Omaha Corporation, if you're familiar with the company, as being boring businesses. Its main businesses are billboard advertising and not the digital kind. They own the static, piece of cardboard on a big platform, billboards. They have an insurance business. They have a rural broadband service business where they just, they're essentially a utility provider. They provide high speed internet access. And they also have an asset management platform. Now, the three businesses I mentioned first are designed to be cash machines. They're designed to have great economics. Static billboards have very, very little overhead. They're just after the initial investment, it's a cash flow machine. The same goes for broadband infrastructure. Once you put the infrastructure into somebody's house, it's just very low cost monthly income coming in. So high profit businesses. The asset management business is where things get interesting. Boston Omaha owns a few minority stakes in businesses through this division, and they're also starting to build out a third party asset management business, meaning they're taking in outside investor capital and putting it to work where they see opportunities. The first one is built for rent housing. They're raising a fund right now to invest in homes that are specifically built to be rented out. And they also see a big opportunity in their broadband space there, especially when partnering with home builders to put infrastructure in the homes at construction. Um, the point here is the asset management business can not only be a source of investment appreciation, as Boston Omaha is investing their own money in all of these projects, but third party fee income. Boston Omaha is a very small company right now, well under $1 billion market cap. But if it raises, say, $500 million of investor capital and takes the usual, 10 or 20% fee for for the gains it generates for its investors, this could be a pretty big source of income for the company that isn't even really being factored into the equation yet. And more importantly, if it's successful with its first fund, its second fund, it could lead to bigger funds of more outside investor capital coming in the future. There's virtually unlimited upside potential here, and it's a very low cost business from Boston Omaha's standpoint. They're using other people's money. So this is one of my biggest investments, and it's one that I think will surprise a lot of people who look back, say, 15 or 20 years from now. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.